connect with Sanjiv Bhasin, who's now joining us on the show. Sanjiv, good to have you on board. Let's start off then with the three FMCG heavyweights, all set to come out with their numbers. Rural recovery will be closely eyed. Which one is it that you're banking on a steady set of numbers from?
Yeah, good morning, Avan. So I think, ITC may be slightly under pressure because cigarette margins could be on the slightly lower side. Along with that, maybe their FMCG business also shows some marginal decline. But I would bet on Lever. I think Lever has guided on a lower note, but I think they could surprise because the stock has done nothing. And I think that earnings will be, washed clearly. Now, we know that this has been a seasonally weak quarter, but the upcoming quarters become very, very robust. So I think FMCG will now also play as a defensive category along with pharma, given that there is this geopolitical risk. So I would bet on Lever being an outperformer, ITC in line, but Nestle would be my star. It is the only company which is increasing its capex, and they see a lot of visibility going forward. So Nestle would be the star which can actually beat all expectations, and numbers can be better than expected.
Sanjiv, what's leading to some of these large cap banking names to underperform? And I would throw in even a Bajaj Finance there. The numbers were largely in line, but the stock almost cracked 3% yesterday.
Yeah, good morning, Aisha. That is more to do with the sentiment. You will sell what you have. And like you said, Bajaj's guidance, its raising of capital all indicate very, very sweet times going ahead. But, it's the sentiment. And generally, markets price in before the results, a large part of the run-up. So there is always the adage, buy on bad news and sell on good news. And that is what has played out, I think, in the case of Bajaj Finance and some of the other large banks. Particularly HDFC Bank, where we thought the earnings were very much in line. For the first time, you're getting HDFC Bank now consolidated at 2x price to book. And I think that next year itself, you can see profits in the visibility of more than 76 to 78,000 crore. So this is the time to actually be contrarian and buy this large cap bank along with Bajaj, I think, which will be one of the best performing NBFCs going forward.
Okay, lot of other stocks as well, which are going to be in focus today. While, of course, it's the three big boys from the FMCG universe. We're going to be waiting out for their numbers. Keep your eyes out on ITC, on Unilever and Nestle. But steel as a sector as well is going to be focused today. And let's just throw some more light on that. The World Steel Association has cut its steel demand growth estimate to 1.8% in 2023. So, it's important to throw light on how the steel demand scenario in India and worldwide is going to pan out. But Kunal, before we move forward, just a word on how the metal stocks you see shaping up. Because, quite a bit of volatility. One big day move up, 2 days of a downtake and, vice versa.
Well, yeah, Asha, and in fact, the metal stocks have not shown the kind of performance and resilience, even in the last leg of the bull trend, which we've seen ending the month of July, August, for the indices. And I think that's the bigger problem for the metal index. But on the other hand, it's not as if that the metal stocks have gone through a very sharp correction. These stocks are very high beta in nature. I think except for Vedanta, which is an exceptional case over here, most of the other metal names like Hindalco, JSPL, even the likes of JSW Steel, larger cap names like Tata Steel, they've been a lot more sideways towards range bound for themselves. Right? I think that's a sign that maybe these stocks require some sort of an impetus or a push in terms of news flow to try and break out of their individual ranges. But the fact that these stocks have also not corrected very sharply, I would probably term this as more of a range bound, kind of a trading band for many of these metal names. So not bearish on the stock, but would wait out for the breakouts to happen individually to take a bullish bet.
All right, in fact, let's take it across then to my colleague Ashesha, who joins in to give us a better picture of the steel demand scenario in India as well as worldwide. Over to you, Ashesha.
Well, yes, so the World Steel Association has gone ahead and cut its outlook, steel growth demand outlook for the full year from 2.3% earlier. They've cut it to 1.8%. They say infrastructure and construction is witnessing the impact of high inflation and higher interest rates. Recovery in auto production, however, continues to remain strong. This is on account of strong order backlog and on account of easing bottleneck, and hence auto demand continues to remain strong. World steel demand is expected to slow down to 1.9% in the next year in calendar year 24, and these growth estimates are led by demand growth from across the world excluding China. As far as India is concerned, they continues to say that India remains in a bright spot. Surge in construction activity, government spending on infrastructure, increased private investment is what makes them bullish on India. So Indian steel demand continues to remain robust. Indian steel demand grew by about 9% in calendar year 22. However, the growth slowed to about 8.6% in the current year, is estimated to slow down to 8.6% in the current year and further slow down to 7.7% in the calendar year 24. Centrum, meanwhile, has come out with a note where they say that China to remain uncertain depending on the policy direction in order to tackle their economic challenges. Developing nations excluding China remain resilient to global headwinds. All in all, for the full year, World Steel Association has gone ahead and cut its guidance, but Indian steel demand continues to remain strong.
Yeah, thanks a lot for that. Sanjiv Bhasin is ready. Let's say hello and good morning to him. Bhasin साहब, good morning.
Good morning, Nikunj. Good morning.
मैच तो पुणे में, आप दिल्ली बैठे हो. दिल्ली में जब मैच हो रहा था बॉम्बे बैठे हुए थे, क्या हो रहा है ये?
अरे आपको दिल्ली आना है भाई. This is the best weather. The weather has suddenly turned in the last 2 days, and I can tell you.
I was there last week, sir. And trust me, the whole night the air conditioner was on. काहे की दिल्ली की ठंडी कुछ नहीं है.
He said last 2 days.
Last 2 days, is it?
Yeah.
Okay.
Last 2 days. Nikunj, you don't need the AC. and the weather is really signaling that better times are just around the corner. So yes, all eyes will be on Pune. I'm there next week, but in the meantime, it's my fast, so I'm at home and in Gurgaon, and you are most welcome to make it here maybe in the next week, where we can actually sit and enjoy the weather along with the markets. Markets are now pricing in all bad news, so I am very, very optimistic that India is going to be the outlier. And as these geopolitical, vibes get little softer, you could see India definitely outperform.
Out of the 4 numbers which came out yesterday, the 4 big ones, you had Wipro, you had LTIMindtree, you had Bajaj Auto and IndusInd Bank. Which one is the standout?
Well, except Wipro, all 3. I mean, Bajaj Auto was always expected. The stock was hitting new highs. Their margins, their new outlook, and the growth trajectory is very, very strong. And by the way, rural incomes are just picking up. LTIMindtree, again, the order book seems very, very smart. And, this stock still trades at a reasonable discount to the large caps despite being in the Nifty. But I think IndusInd Bank has taken the cake, given that lending on the 2-wheeler or the 4-wheeler side has been very, very strong, and their net interest income and margin both have expanded. So I think the numbers are very, very reasonable. You will take it with a pinch of salt that most of these stocks have also run up in anticipation of that and a day or so of profit booking. But overall, if you ask me, Nikunj, the earnings trajectory till now has been a beat.
Right, let's move right on and focus in then on IndusInd Bank. A healthy set of numbers in Q2. Revenues, profits, both came in line with the street was penciling in, with a 23% rise in the profits on a year-on-year basis. Let's understand a little bit more about the fine print. We've got Somit here who joins in with the details. Somit?
Well, in case of IndusInd Bank, if you see, brokerages have maintained their bullish stance on the bank. In fact, brokerages like BofA, Jefferies and Kotak have in fact increased their target price as well on IndusInd Bank. Now, BofA says that they're seeing a healthy loan growth momentum when it comes to IndusInd Bank, and they're expecting stable NIMs and credit cost in the second half of financial year as well. Macquarie continues to believe that IndusInd Bank can deliver a return on asset of close to 1.9% due to its high margin structure going forward. Jefferies is expecting a 21% profit CAGR from IndusInd Bank over FY23 to FY26, and they believe that IndusInd Bank continues to remain on the top picks also going forward. And for Kotak, they believe that the cyclical tailwinds will reduce the credit cost, and it is a credible positive investment thesis when it comes to IndusInd Bank. But the other positive news coming in for IndusInd Bank is that they had disclosed their second quarter shareholding also yesterday, and as per the shareholding data, the FI holding in IndusInd Bank has decreased to 62.6%. Now, because of this decrease in FI holding, the foreign available room investment room for FIs have increased to 15%, which means that IndusInd Bank could now get included in the MSCI Standard Index in the November 2023 review. Now, this review notice will come out on November 15th, and the flows are expected to come in on November 13th. And as per brokerages, IndusInd Bank has now a high possibility of getting included in the MSCI index. Now they're expecting inflows in the range of around 250 to 300 million US dollars when it comes to IndusInd Bank, and on the back of both these factors, IndusInd Bank would remain in focus.
Okay. IndusInd Bank could remain in focus. Bhasin Saab, IndusInd Bank perhaps is one large bank which has no large subsidiary advantage. You know, Axis has moved into insurance, their security business is big. ICICI Bank has got multiple subsidiaries. HDFC Bank now has multiple subsidiaries. IndusInd Bank is the only one which is a pure vanilla banking business per se. So what should one do? Look at umbrella offerings or look at an independent bank?
Yeah, good point. So I would definitely take HDFC as a slightly longer term standout given its subsidiaries and the other businesses and the parent business, which is doing extremely well. Just like I told you, it trades at now much less, on a price earning even less than ICICI Bank or close to that. So I would definitely, but IndusInd, Nikunj, purely on the back that it is owned by the Hindujas. They have actually put their money where their mouth is in the last 2 years. And now with succession issues over, it is definitely going to get more market share. You've seen their new ads and the new type of wealth management business which they are focusing on. All that could be an added advantage. Plus, I think we are at the cusp of a season where I think private banks will actually lead the index. Actually, I think the Bank Nifty is going to be one of the forecasters to rise because I would expect IndusInd and HDFC Bank, both underperformance to be over. And I would say PSU banks could take a little breather. So IndusInd and HDFC both are buys around this period or on slight declines.
Nuresh, construction stocks have done very well of late, starting from in BL Kashyap to an Ahluwalia. I can throw in an IDT cementation. Is there a trade in any of the construction stocks now, Nuresh? I mean, everybody's bullish on infra, everybody's bullish on road, everybody's bullish on real estate. So then the big beneficiary would be construction companies, what we call in Hindi Thekedars.
So one by one, we've seen that it started off with NCC, HG Infra. Those were the leaders before. And now we are seeing new leadership come up. So even a Jaikumar Infra yesterday hit a new 52-week high. Then you have the two names which look interesting right now is a KNR Construction. The stock was one of the best performers in the earlier cycle in 2014 to 2017. Then in 2020 to 21 also. Then it has gone sideways for the last 1 year, consolidating around the 270, 290 mark, high volumes in the last 2 months. So this is a stock which could break out, good risk reward here. So first would be KNR Construction. Second would be an older name out of the sector, which is IRB Infra. Now this stock has gone sideways again from 2021. And also if we go back to the highs it made, it was around this 31 mark, 31, 33 mark back in 2010. Was at 30 back in 2014 to 2018. And now finally the stock has given a multi-year breakout above the 34, 35 mark yesterday. Very large volume. So this could be a stock which could outperform going forward. A relatively high beta name compared to a KNR Construction. So a good combination to have. So at current levels, I would go with KNR Construction and IRB Infra.
All right. Thanks very much for that. And thanks so much for joining in, Sanjeev.